Welcome to the February 2023 Las Vegas Real Estate Report. In this video, I'm going to cover the January housing stats for the greater Las Vegas area. We're going to talk about what's going on with home prices, what's up with mortgage rates, why are they fluctuating so much, and why have they gone up in the last literally couple weeks. Hint, hint, it's all about inflation and economic data and reports. And we're going to talk about what are the opportunities in the market right now, whether you're buying, selling, or both. Hi, my name's Jan O'Brien. Thank you for tuning in. Welcome back. If you are a subscriber, if not, go ahead and subscribe. We post this every single month. If you're really into the data, you can check out Cosmo's weekly report, which we're posting here, or on our TikTok channel, which you can see it right below here on the slide. This is our great team of real estate professionals helping you all across the valley. Reach out to whoever sent this information to you. We're here for all your Las Vegas, Henderson, Boulder City, and Pahrump needs. All right, let's dive into the data. What's the big story? Three big things I'm going to talk about. Well, we just 425,000 for 2 months in a row. We stayed at 425,000. That's what it was in December. Price is flattening out a little bit. I'll show you some data in a moment where I believe it's going to be lower in February because we track that information weekly, as I just mentioned. 48% down are sold properties, though. So this column right here is showing you all the data from January of last year. So we went from 2,561 homes sold in January of last year, down almost 50% at 1,325. The other story is available inventory. So with interest rates up, not as much demand. People are sitting on the sidelines, kind of waiting it out. Plus, there's not a lot of inventory. New listings, 2,477. December is usually a lower. We generally see much higher. In fact, 2,900 is what we saw in the January previous. So we're down 14.6% in new listings because sellers don't want to move if they don't have to, because why would they if they've got below 3%, below 4%, interest rates, they've either refied or that's what they got when they purchased their home. So with all of that, sales are down, buyer demand is down, interest rates are up. There's not a lot of inventory on the market. And that's probably at the moment why we're seeing these numbers kind of stay flat. If we would have to get a bunch more inventory for the prices to really decrease a lot. The numbers show that we're going to have a little decrease in February. More on that in a moment. Let's get a little perspective though, right? So I like showing that data that I just showed you in a bar chart, because here is where we hit the high historically for median sales prices in Las Vegas. It was May of 2022, 482. And right in the end of May into June is when the interest rates went up. The interest rates shot up because inflation information was starting to come out, and the economic data had the interest rates start climbing up to 6, and we even got up to 7, which we're getting really close to hitting 7 again. We'll cover that in just a moment as well. So we continued to come down through 2022, essentially erasing the gains that we got from this 482, from 435 to 482 for the first half of the year. They were erased as we ended the year at 425,000, which was basically where we started the year, where it was in December of the previous year. Now, the bigger picture that I like to share is a lot of people get hyper focused on, well, I lost that equity, that I had in 2022. Well, you really didn't, because you didn't sell your home. But the bigger picture is, unless you purchased your home, in May or June of 2022, and you purchased it previous years, you should have a lot of equity in your home. And this chart shows that. So if you bought a house in 2012, median sales price was 149. We're looking at 425 right now. That's pretty good appreciation here in Las Vegas. And here's the data in a chart like this showing the biggest gain we had was that 2020 to 2021 right here, from 345 to 425. Median equity gain for a single family home in Las Vegas for a homeowner was $80,000 that year. And it basically zeroed out in 2022. So mortgage rates, what is happening? Well, I put a link right below in this video, or if you are subscribed to our newsletter, you can reach out to anybody who sent this to you, or reach out to us. Our information's in this video. We'll gladly add you to our mailing list, because we send out a newsletter every month that has this video, but also other information about what's happening in the area. But I have a link to this great article from Mortgage News Daily. I love this for source of information about it really gets into the bottom line in layman's terms of what's going on with when the interest rates move currently on a daily basis. So this article is called Looking for Silver Linings for Rates and Housing. I want to point out a couple things as I record this. It's February 25th, and the interest rates for a 30-year fixed mortgage with no points is 6.88%. That moved up just a little bit from the day before. If you're getting an FHA loan, it's at 6.35, and that's just for the February 25th, because it will probably be different come next week from the time I'm recording this. But here's the highlights in a nutshell. Home prices surged, as I just mentioned, post-COVID, right during and near the end of COVID, because there was a huge demand. The Fed dropped that rate down, the short-term rate down to 0 to stimulate the economy, and now we're reaping that, what happened from that. So huge demand, no supply. I mean, literally lowest supply in history, highest demand, lowest interest rates was the perfect storm for all that appreciation that we had here in the Valley, along with all over the country. So it outpaced the supply. More people had the opportunity to buy homes. High home prices then contributed to decades high inflation numbers. And that is why we've had the highest inflation rate since the 1980s. So new high rates made buyers sitting increasingly reluctant to look for homes. They're sitting on the sidelines, and homeowners don't want to put their homes on the market because they have these super low rates that they've got over the past 2 years. So what has inflation done here? Well, we just got a report as I recorded this on February 25th last week. The CPI report came out, and that's in the orange. And it caused the interest rates to go up a little bit. And they had, in a few weeks earlier, they had gone down to 5.99 in February, based on the Fed Chairman Powell having some comments to say that, like, there were favorable comments, and the markets reacted thinking that, things were under control. Then we get that report. So they went down to 5.99. Then we get a great jobs report, meaning great for people, because if you follow what's happening with the economy and any financial news, the good positive job reports actually created fluctuation in the markets, which caused the interest rates to go up. And it just meant that we have low unemployment. It was better than expected. And then right after that, all in 1 week, we get this CPI report. And it went up. Inflation went up a little bit instead of coming down. So for several months since November, with all these short-term rates that they've been putting in place, the Fed, it's been helping inflation move down. And they want to get it to that 2%. And that is the goal. And now everyone's feeling like we're not going to get there until probably the end of the year, if hopefully we can. And that's where we'll see interest rates start to come down again. And then was the PCE came out, which is excluding food and energy, and that was a lot higher. So we had all this sort of negative economic data as it comes to rates, and that resulted in this right here, this crazy. This is showing historically the rates here since second quarter of 2022, where we kind of hit high here in the beginning of middle of last year, and then they came down again, and then we fluctuating back up, and we're at 6.88 as it is. Okay, so. Now, what has that done? Let's look at historically at the housing inventory and sales. And so a lot of people will talk about, well, we're going to have a crash like we had in the Great Recession. Well, the Great Recession was right in here, right? And what happened is we had too much inventory. This is when we had all the short sales and foreclosures. And the difference is now is we don't have enough inventory, okay? So for the prices to really crash, like you might see in some YouTube channels and on the news, or other people thinking the sky is falling because of equity positions right now, and because of not enough inventory for the reasons I've been talking about in this video. No expert, and I'm by far no expert. I'm just sharing what I have learned and what I know, 30 years practicing real estate here in the Las Vegas Valley, that we don't have that happening unless we get a ton more inventory on the market and have low demand. And that would help. That would push the prices to go down further. But we don't have that right now. So what's the takeaway? Well, it's going to get better. We're going to see the uptick in inventory, affordability, and demand once inflation gets under control. And the question is when. And the only way we're going to know that is live through it here, stay informed, follow us here on the channel, and we'll be able to help you share what we're seeing here, boots on the ground in Las Vegas, and what we think is happening on a week-to-week basis, and then do it in a monthly report for you as well. So what are the opportunities if you're a buyer? Well, the inventory is better than it was a year or so ago, in the last couple years, clearly. It peaked in September, but it has been declining since, as I've talked about here. We peaked in, this is there's that same report here, 8121 down to 5450, but there are homes on the market. And where I believe the opportunities are right now, if you're a buyer, even though the interest rates may not be where you want them to be, is there is opportunities because there's not as many people looking to buy, to get in. And if you don't have as much competition, so whether you're buying new or you're buying from a resale homeowner, there's opportunities to compete for incentives, to get maybe a lower price, get the seller to cover closing costs to be able to buy down your interest rate. We're doing that every single day in the clients that we work with. In particular, there are definitely benefits currently, and they're changing a little bit because more people are out buying new homes because the incentives are great with new homes. We're seeing that they had reduced their prices along with resales, but right now, if some of the builders are really picked up their sales, they're not offering as many incentives. Then we have builders who are offering a lot of incentives, from good pricing, even getting a little bit off of the price, to 3% in closing costs. And they're all offering special financing that's below the current market, like 4.99, a 7-year ARM, or 5.825 is a rate we got our clients the other day, all being covered by the builder. So there's opportunities if you're ready to move in quickly on their spec homes, their inventory homes that are there, or they're under construction, or they're already done. That's where the incentives are. Reach out. We definitely know we're out every single day looking at a lot of new homes, and we have the connections with the various new home sales agents. We can tell you what's going on there. Let us negotiate on your behalf if you're a buyer for the best price for seller concessions, whether it's a resale or a new home. If you're a seller, so I mentioned that market peak was at 482. We're down to 425. And here's the weekly report. And I just want to point out, I need another week of data to really know the numbers. But here is the sales price median for the first 3 weeks of February. And if we just were to average that, we'd be at 417. We need the final week of data. It's a short month, but we're probably going to be 417, 420 for the median sales price for February. Tune back in next month and you'll be able to, I'll be able to tell you exactly what that was. But if you are thinking of selling, here's the deal. Homes are still selling. The homes that are sitting on the market longest are either overpriced, and if they're overpriced and they haven't been renovated or updated and they have a high price, then they're definitely sitting on the market. Homes that move quickly on the market are the ones that are priced well, that are that look good, they're well maintained. Perhaps they've been updated. Those are getting competitive offers, multiple offers. We can't always get our buyers into those. By the time they move out or ready to move out here, the home's already sold. Others are sitting on the market. So if you are a seller you're thinking of selling and you want to sell your home, reach out to us and we'll talk to you about the opportunities. Where are they? Because if you want to sell and buy, the opportunity right now is still to get a good price on your home. We don't know if the prices are going to keep on coming down. It all depends on the data and inflation and so on. But right now, we definitely know that we could help you get your home sold and go negotiate a good deal on your behalf for a new home or another home and get that interest rate down. Thank you for watching. We'll see you in March. Go Knights, go.